One of TechLead's video from last year in May was this one, how I lost $350,000 day trading and what I learned from it. And oh my god, reading this video title is already really painful. So many of you know that I watch a lot of YouTube videos that's not related to day trading. I watch some real estate, fitness, film and animation, comedy, and some tech YouTube channels as well. I basically watch a little bit of everything. The only thing that I have zero interest of watching is makeup and supercars. And one of the tech channels I've been following for a while is the TechLead. I watch him not because I care about coding, computers, and all that stuff. That's clearly too smart for me to understand. One of the reasons I follow TechLead is because he speaks in a monotone for almost all of his videos.
One is that I had been new to the game and I felt a little overconfident and I was starting to make money right off the bat and I thought that this whole thing could...
And it's nice to listen to him to cleanse my mind after a full day of hectic day trading in the markets. And one of TechLead's video from last year in May was this one, how I lost $350,000 day trading and what I learned from it. And oh my god, reading this video title is already really painful. Not because losing $350,000 is a lot of money, but because he didn't put a space in between the word day trading. It's two words, day trading. This is really triggering a lot of my OCD tendencies. Let me make it really clear. I like TechLead's videos and I've been following his channel for a long time. This video right now is meant to be constructive. We're going to review TechLead's experience day trading for over a year, what he did well on, as well as what are some of the mistakes that caused him to lose $350,000. And hopefully everyone here can learn from his experience. So let's talk about TechLead's journey day trading now. In the video, he shares that he was focused on trading commodities in 2014, specifically the ETFs that was tracking the underlying price movements of these precious metals like gold and silver. Some of the tickers he was long were RJA, SIVR, and RJI. And I'll be completely honest here, I try to stay away from commodities. I used to day trade some gold ETFs, such as JNUG, JDST, and DUST, especially during FOMC. These tickers make great momentum trades long and short, but I never hold them for too long. Because if we're day trading, most of these assets are just trading vehicles that's moving, not because we believe in the long-term valuation of the company, or in this case, precious metals. TechLead has also mentioned in his video that the reason he had longed these commodity ETFs is because they had a good run in the beginning of 2014, which is very true. And he was also using these positions as a hedge as the US dollar weakens. If you look at these charts for crude oil, gold, and natural gas, the trend is certainly going up from January to June of 2014 until the trend reversed. Unfortunately, TechLead was caught in this sharp trend reversal in commodities, which he mentioned in his video, The Commodities Price Shock of 2014, in which the global commodities prices all dropped around 38% between June 2014 and early 2015. I'm not here to dissect and analyze these price trends or the global economic factors that might have caused the crash. That clearly is not my expertise. I'm just a day trader, not an economist. And that price drop was very similar to what we saw in late April this year, when crude oil went to negative $37 per barrel. No one could have seen that coming. But if you did though, next time make sure you call me first. But the mistake TechLead made here was not because he was lazy and didn't do the work or the research. No, the guy did the work. I mean, he was a senior level engineer who worked at Google, Facebook, and other big tech companies. I'm sure he has an IQ above Tesla's stock price, post-split and pre-split. While I always say most new traders entering the market fail because they treat trading as a get-rich-quick scheme and never bother spending the time and effort to learn the skill first. This was certainly not TechLead's mistake. But the first mistake here was that he fought the overall trend of the stock. From the video, it sounded like he was swing trading and joining big picture trends, which is a very viable strategy. Like he said, the global commodities did have a great run in the first 2014, and it sounded like he was simply buying the dips to join the trend and going higher. And this is a strategy that works perfectly fine until the dips just keep dipping. When trading intraday, we use higher time frames such as 15 minutes, 30 minutes, or hourly charts to see the clear trend of the stock. We always say in day trading, the trend is your best friend, but that also means when the trend reverses, you better get the out. If TechLead's strategy was joining the trend on this multi-month swing, then he should be observing the weekly and also monthly charts. Using RJA for example here, the first bearish sign was the weekly uptrend breaking. The second sign was this lower high that cannot retest the previous high. And then finally was the retest of the previous low from the beginning of 2014. From a technical analysis standpoint, if a stock has completely given back its entire good bullish run of 6 months from the beginning of 2014 to June, and now we're testing previous lows and making lower lows, this is extremely bearish as a swing trade. So this is the first lesson here. Don't fight the trend, especially when it's a global decline across most commodity prices. And really, the real fundamental reasons are just too big for us little retail traders to fight against. The second lesson here is do not become too overly confident with beginner's luck. It's interesting that both the TechLead and Graham Stephan both had some luck making money right away trading in the market. While I'm clearly the least lucky beginner trader here because I never made any money in my first year day trading. And in hindsight, looking back now, that was a great learning experience. Like I mentioned in many of my previous videos, luck is not a consistent strategy that you can rely on. Especially when you are a brand new trader and start making money right away, it's very easy to feel like you know it all. You are right all the time and you own the market. If a trader made money early on doing these bad habits, such as chasing breakout, adding to a loser, or holding and hoping, then of course he or she will repeat the same behavior again, expecting to get away with it in the future until that luck runs out. Being lucky in the market allows the traders to disregard the real foundation of day trading, which is risk management. And this is the third important lesson here from TechLead's experience day trading. Yes, he did fight the trend and got caught on the wrong side, but he also didn't cut his loser. Instead, he kept it on and holding and hoping for too long. I'm sure beginner's luck, like we talked about earlier, also contributed to the reason why he held on for so long. Another reason was that he started doing a lot of research and reading into these news sites that are contributing to his thesis and his hope in commodities. And this is a very interesting thing to realize for all traders watching this. If you analyze your losers and your winning trades, you'll notice that you do a lot more research in the losing trades after you are already deep underwater. No, really think about this and reflect on this fact here, because I've certainly done this myself. Some of my biggest losers in the past as a brand new trader was holding onto these small cap turd stocks for way too long. I kept on holding and adding to those losers and researching news on Twitter, StockTwit, and Yahoo Finance. Oh, this company is in the process of making new drugs that's going to cure cancer.
I mean, I'm long already. I'm down a lot of money since $5. But I'm gonna be right, you're gonna be wrong. Just watch me become rich and hold on.
Oh, Jesus. Been there, done that. It's okay, you're not alone here. I've done this in the past as a beginner trader on these trash stocks like SAEX, TOPS, and GBR. And that's what we call in day trading doing the homework while bag holding. And it's from doing all these research while he was underwater with a commodities position that the TechLead became too overly biased and held on to his losing positions until the end of 2014, which resulted in a big loss of $350,000. $350,000 is a lot of money for a new trader to start with. This is why I always preach that if you want to start day trading, yes, you want to start with a decent amount, like $3,000 or $5,000, to feel like you have a skin in the game and know that this trading account is enough and worth it for you to manage your risk and limit your losses. But at the same time, generally it's a bad idea for new traders to start with too big of an account. Because you do need time to start learning the setups and the strategies and building your trading discipline. And most importantly here, how to manage your risk. If you cannot manage your risk on a small $5,000 account, you won't be able to protect your $100,000 account. That's just the honest truth. Again, this video is meant to be a constructive review of the TechLead's experience in day trading. I'm sorry for his loss, but I'm sure he's made it back many times over as a millionaire by now. And I'm very grateful that he's sharing his loss on YouTube for new traders entering the market to learn from. Make sure to check out TechLead's original video below. If you enjoyed this review, make sure to drop a like at the bottom of the video. Thank you guys so much for watching as always. I'm the Humble Trader, and I'll see you guys next week. Hey guys, thanks for watching. I hope you enjoyed the video and the bad jokes. If you want to see more day trading content, make sure to subscribe and follow me on Twitter and Instagram for more. If you'd like to trade with me daily and get my free weekend watch list and trading journal, make sure to check out the links below for more resources. Stay green, stay positive, and I'll see you guys next time.